3, 2, 1.
Here we go!
Welcome into the open where we get technical. You should have investments in long-term growth. Good morning, everyone. Happy Wednesday to all of you. I would like to know how everyone in chat is doing today. Give me a 1 if you're feeling good today, if you're feeling good on a Wednesday. Spencer, same question to you, man. How are you doing?
I'm here, which is all you can say.
I love it. Neutral is okay. We can't be at peak euphoria all the time. Neutral is a-okay, baby. I'm glad you're here. You changed up your background, though. What's up with that?
Well, it's Oscar season, right? Isn't it?
I don't know.
No?
Is it? Is it Oscar season? Yeah, beginning of the year.
Yeah.
Whatever. All right, cool. All right. Guys, today we are going to talk about a couple stocks. I have a couple picks for you that are exhibiting good breakout patterns. I'm also going to go to some previous stocks, particularly DocuSign, which I spelled wrong, like Count Dooku from the Star Wars prequels. So we've got DocuSign, we've got Azul, we've got Coop, we got Marvel we're going to look at today. I want to look at Marvel because I want to introduce to you guys something really different from what we normally do. What we normally are doing is looking at tickers that have very discrete breakout patterns and then entering and exiting and calling it a day. Marvel is a really cool stock that was brought on by a watcher named Pam that has been trending up for a long period of time, and it has just had breakout pattern after breakout pattern after breakout pattern. So what I want to introduce with Marvel is single stock trading. So you stick with the stock that you know, you watch it really closely. So when things go wonky, south, north, east, or west on you, it's not a surprise because you watch it every day. You know it intimately like it's your friend. We're also going to talk about cryptocurrency. I also want to introduce to you today volume profile. This is something I'm just learning about. I have a feeling it's not terribly complex, but it's something that is kind of getting traction right now, getting more popular. So I'm going to use it on one of my picks for the day. That is CRC. So without further, and I also have a great guest lesson for you today. As many of you know, folks that work in Forex charts are great at bringing that technical analysis over to stocks. Why? Because for the most part, Forex relies on nothing but technical analysis to be able to make informed, highly probable based decisions on what you're going to do next and what a price might do. So the Forex folks are absolute beasts with technical analysis. So I love having them on the show. That's Nick Dark for our guest lesson. All right, let's get started with California Resources. This is a company that injects CO2 into doo-doo. So you can grow food. All right. So we're talking commodities, super cycle right now. We're talking commodities. We're talking about rotation into things like energy and various metals and commodities that are necessary. It doesn't really matter who produces it, but it's something that industries need. It's something that the economy needs. So taking a look at California Resources Corp. By the way, this ticker CRC, when you type it in, depending on your brokerage, you might also get another stock that is traded on a different exchange. You're looking for the CRC California Resources Corp. All right. So looking at this one, very classic. This is looking like Palantir about a month ago, and that's a big part of why I like it. Very, very simple. We haven't had one of these for a while. This is a classic ascending triangle pattern. We had this with the Palantir recently. What I did was use options to make money on it. So I'll describe an option strategy very briefly for this. But what we have is at the bottom, upward sloping support, higher lows. At the top, we've got very consistent level resistance. All right. Now, something interesting, volume profile has entered the arena. What I'm showing you here on the right, these yellow and blue bars are volume traded at certain price levels. So where you see it on the right is the price level that has had the amount of volume or the magnitude of volume that is shown on what is called this graph, which is known as a histogram. So we see that the majority of the volume within this sort of bell curve is highlighted. It's a bright saturated color, and then as it comes out of that, we see that the volume gets really low, and it's not really considered as important. I don't know enough about volume profile to give you the terms for that, so if you know it, I would love to get it in the chat. So for any of you volume profile people that know this, let me know the terms, because I'm here to learn with you, and I know that I know that I don't want to say the majority, but I know there's a lot of people in here that are vastly more experienced than I am and just plain out smarter and better looking. So if we've got any really handsome, beautiful people in chat that have more tips on volume profile, I would love to know the terminology and let me know if I'm doing stuff wrong. Because, guys, I am learning this and I'm sharing it with you as I learn. So, guys, what I do know about volume profile is that when you pull it up in your tool, on your charting tool, it's the value area. Thank you. The colored parts of this volume profile that you can see are considered the value area. So what I'm taking from that is that this is where the majority of the buying and selling activity occurs before there's a dip and then perhaps another value area somewhere else on the chart. Now, this is a fairly young stock. Look, it didn't exist until October of last year, the end of October. Very young stock. So there's not a lot of price history to establish more value areas or more meaningful parts of the volume profile. But what I do know is that this red line is considered the point of control. Well, I'm also getting AOC, not the populist politician, but the area of control. The area of control. And what I like about this is that it sets up a very volume-based line of support or resistance, and it's damn close to what I've drawn based on the price action. So we can see that in this area of consolidation, this tiny little corrective phase, and then also just a little bit at the peak here, and within these high spikes, these highly traded like middling volume areas right here in these big candles, we have enough trading volume within this price area. I'm going to treat it like a range. Within this tight range, this is where the buyers and sellers are really, really coming in. And because this is near the resistance line, this means that this point of control is in the control right now of sellers. So we're going back to just breakout basics. What happens with a breakout? You have a line of resistance, a line in the sand that the sellers say, we sell here. This is the point that we take our profit. And we're doing it every darn time you push it back up to this. We're buying on the lows, and every time you get back up here, we're selling it because we like this number. And what we're trying to do is close the gap between the buyers and the sellers and get the buyers to come in and say, no. This stock is worth more than that. And we break through that line in the sand and we establish bullish control. So that's what we're looking here to do. An ascending triangle is a great illustration of that. Why? Because you can see the buyers becoming more and more bold. At the start, they let the price go down here before it looked attractive to them. And then at this next dip down, at this next little pullback down to the support line, they said, no, we'll buy earlier. We'll buy at a higher price. We like this stock. And up here, we're starting to get really congested. When you get this little congestion right at the resistance, this corrective phase, this period of consolidation, this is when we are charging up. All right, this is when we are charging up. Yellow and blue designate buying and selling. Blue is buying, yellow is selling. Check me on that chat because I could be wrong, but that is what I am thinking. And actually, in most of the stuff that I've seen about volume profile, people on the for the most part, are not paying too much attention to the yellow and blue. They're not like Nick Shaheen, our options guy at Benzinga, uses it all the time. I've seen others use it. They're a little more interested in just where is most of the activity taking place, whether it's buying or selling. And which indicator is it? This is volume profile. I'm currently using TradingView, which is also available on Benzinga Pro. I just like TradingView for this show because it makes it much easier for me to get a big, huge, blown up window for you guys. Much easier. So in this, you have volume profile. You go to your indicators, you have volume profile. It's built into TradingView. And I'm pretty darn certain that if you're a pro user, you can also get this when you use the advanced charting tool, which is powered by TradingView. So it's awesome. Best in the business. So guys, what are we looking for? Well, we're looking for a breakout. We're looking for a breakout. Conservative breakout on this ascending triangle, as always, is our swing high down to our swing low, added to our breakout point. You can see that I already drew a line. This one's a little bit different because I'm a little bit sloppy. But this is, in general, the range we want to get to. And as always, as we're approaching these round numbers, we know that people set these round number price points in their head. You know, you've got an investor, maybe they're at a desk, maybe they're in Wyoming sitting on a lazy boy with a laptop, the newest MacBook Air with the M1 chip, and they say, I like this stock. I'm going to get in. I see a breakout pattern, and I'm going to sell it at about $35. So those rounding numbers create a lot of congestion in the flow. So it's very important that we're not getting sold off before we get to that price target. So I say, do it within like 50 cents before that price target, depending on the magnitude of the move. Something like this, I think you can reasonably do something like 5 to 25 cents before that. So what it is, again, this indicator that I'm using today is volume profile. I'm going to try to introduce it to some of the charts that we're doing through the week, for the remainder of the week. So anyways, we've got confirmation that this is a very key price point. So I've done two things. Number one, I've set my conservative price target, which is based on the measured move of my ascending triangle at the resistance line. And I've actually placed it where I think it should break out, because this is an important area of control based on our volume profile. We do have the buyers and sellers battling it out, which is like, how can you put it? It's sort of like it's a tug of war with like 3 10-year-olds that are all hopped up on bologna sandwiches and what do you call it? The yogurt that comes in the tube. They're all sugared up on that, and they're pulling back and forth, and it kind of seems like they have equal strength. They're going to get exhausted because those yogurt tubes don't provide long-term energy. It's very simple sugars. They're going to crash, and then one side is going to crash. We're hoping it's the selling side of those fifth graders. And when that happens, that's when we get a surge in price. All right. I don't know if you could see me on the camera, but I did a very aggressive move upward. All right. And again, that surge in price, this is the conservative price target, which is based on this measure move, which is a swing high in our pattern down to the swing low, added to the top. Simple stuff. If you guys have been watching this show, Go-Gurt. Go-Gurt. It's been so long since I had some. Maybe I'll grab some this weekend if I'm feeling like getting crazy. So this is a conservative price target. You can make it more conservative. What I will say, and I'll show you with Marvel in a second, that some stocks are just perfect, and they do exactly what you want them to do when you're doing these patterns. They hit the exact price targets, and then they almost always sell off a little bit once they hit them. MRVL, Marvel is one of those stocks, and I'll show you in a moment. And that's why I want to use that stock to continue to trade on an ongoing basis. But with that said, you can be more conservative and draw your line starting at the point of control. All right. That's not a bad idea, because like I said, with those round numbers, that's when a lot of sell volume comes in, and that can drive you down like a reverse polarity on a magnet. I'm not sure if that's scientifically accurate, but it can push you away from where you're trying to get. It can push that candle down and not quite let you get to that actual price target. especially with a big old breakout like this, guys, because we're talking about if we go from this target to a little bit above it, this is a cool 33-35% in a very short period of time that we're looking for. So like I said, just like Palantir, great for in the money call options expiring in about 30 to 60 days. You can play with that. That's actually kind of a middle area. I would say if you want to be safe and you're willing to take on the risk to buy strike prices that are in the money, that are calls that are expiring maybe more like 2 to 2.5 months out, that gives you a little more time for this swing trade. Again, this is a daily pattern. There's more time for this swing trade to break out and then have that extreme volatility. And that extreme volatility is what is going to shoot up the value of your options contract. You sell it to close after that. That's how you do that. That's how you leverage a smaller amount of money to profit from these breakouts. All right. So do I see a similar Christian has a question. Great idea to combine volume profile and in a triangle pattern. Do you see a similar setup in Ethereum? I haven't tried it yet, but I want to. I really want to. And probably yes. I would say dollars to donuts, yes. If you're watching any folks that are like, they consider themselves a crypto guru, they might use that stuff nonstop, because crypto, not unlike Forex, relies almost exclusively on technical analysis. So they're pulling every single tool they can out of the works. Every time there's a new tool, new shiny thing, they're trying to use it. Generally in the stock market, we try to look at just price behavior as our ultimate indicator. Now, an aggressive target on this, guys, I know I'm taking a long time. I really wish I had more time for the top of this show. But a more aggressive price target is based on this pull. We can based on the pull. So let's go to where this upward trend really started. So we'll go to the base of this green candle, draw it right up to this resistance, and then add that to our breakout point. So more aggressive, higher price target will probably take more time to hit that target. We do have some good volume here. We are in a nice little consolidation corrective phase that should result in an explosive move in some direction, hopefully in the bullish direction, which would be a continuation of this phase. But this price target, if I just do that sideways, is something more like 55%, right? That's a lot. We hear stocks doing that all the time, but usually they're stocks that have been trading sideways at like 3 cents for the past year, and then all of a sudden they explode because either they've been manipulated by some type of online community, or they have an extreme catalyst, usually bio like pharmaceuticals usually. So at any rate, that is this one. What is this one? CRC. Make sure you're looking at the California Resources Corp, because there's another one that has a similar name. So yeah, that is one to watch. Price targets again. Hopefully you guys got them, but I'll just do them really quick. Aggressive. Whoops. Aggressive 42. I would sell it at about 38.50 probably. And then conservative. I'm about to sneeze. 35. All right, guys. CRC. That's just a classic one. Looks just like Palantir. Go back in time on Palantir. Looks just like it. Azul Airlines. Like this one. We've mentioned this one in the past. It is still on the menu. All right. What we have here is a cup and handle that was followed by not a traditional handle, not the handle that you usually expect, which is more of a channel, a downward channel. This one is a descending broadening wedge, still fits the bill. What we can do is almost just remove the whole cup part and just look at what's happening here. We have an upward trend followed by a period of consolidation that is in a downward direction. And the lines are not parallel, they're actually broadening. So this, in a lot of, like, people call these various things. They call them reverse wedges, they call them megaphones, they call them broadening wedges, they call them tomahawks even. All of them are the same thing. Do I use the golden cross? I'm starting to use the golden cross. So broadening wedge basically is upward trend followed by the opposite of what we just saw, which is more of like an apex here, right? Where these two lines meet, and then broadening out. It shows up all over the place. This is one to really do your research on because it can be a reversal pattern. However, in this one, I expect a continuation. I expect a bullish continuation broadening wedge forming on the right side of our cup and handle here, for which we would measure when you're talking about this pattern. You're measuring, and since this is a descending broadening wedge, it's going to look something more like this, like that. So it's not quite a triangle. What you're measuring is the height of the swing high. So in this case, it's right here. And so I'll just do it on the chart, guys. Let's do it on the chart. This is a pattern that can be tricky, but it's definitely one to recognize. Most people, if you're following people on social media, most people are calling it a megaphone right now. That's what it looks like, right? It looks like a megaphone. But in order to get your measured move to set your price target, what you're doing is going to the very top of your pattern, measured down to the bottom. So our measured move is something like this. I'll start at the bottom with my handy dandy line tool, and then I'll go to the top. My headset just died and I turned it back on. So that's our price target. We add our price target to the breakout. There is a high likelihood by looking at this stock right now that it will break out today. I'm really, really gunning for it. This is something that I would hope to happen around lunchtime or near the close. So this is something where if it closes above the breakout line near the close, so you always look at your charts around 3:45 p.m. Eastern time. So if we do that, that's a great entry and a great time to, like I've been doing on all of these, buy some in the money call options for 2 to 2.5 months out based on your risk profile. So I'm going to delete this line. So we've got a price target on this one of about 27 based just on that broadening wedge, right? So we got charts within charts or patterns within patterns. So if I use my ruler tool, that's about 13%. But again, guys, those call options are all about implied volatility. So when you get that big upwards move, it's not about gaining 13%. It's about gaining something more like 20, 50, 70, depending on the velocity and the strength of the single candle that ensues the breakout after the resistance. How can there be a... Oh, this is a great question. Turbojet 1. Neil. Guys. Neil. Neil. Neil, not that I really care, but just so you know, Neil, how can there be a pattern when the market is super sensitive and affected by the minute by minute news? In technical analysis, we make a few there are a few tenets of technical analysis. And the first one is that all factors internal to the organization and external, meaning economic factors, things that are happening with inflation, announcements by the government, things that are happening with competitors, partnerships, all external and internal factors are built into the price because the market is a massive hive mind. Hive mind, there's a term for you, of buyers and sellers who are constantly reassessing the value of the asset you're looking at. So all of those factors come in via every single buyer and seller into the price of the chart. So the chart is a reflection of that minute by minute news. That's my answer to that. Okay, so making it really, really simple here. The move here, I think, is a close above this resistance line, which means just a candle as long as it's green and it closes above it. If it goes like that, as long as it's green, we good. Or if it closes clear above it and it's floating like a beautiful little cloud on an ancient Japanese painting, then we're looking to get some call options and capture some of that massively growing implied volatility to make more than 13%. All right, that is the option strategy there. All right, I'm going to turn off the volume profile right now because it's actually distracting me, and I don't like to have too many things on the chart. I like to keep it simple. Okay, so we've got 5 minutes left. 5 minutes left. What should we look at? This is DocuSign, not dissimilar, but one to be careful with. One to be careful with. We have earnings coming up. My humble opinion, and again, the show is not about financial advice. The show is about education and entertainment, hopefully in equal portions. My belief is that the earnings will be a positive catalyst that will break us through our line of resistance. All right. That's what I'm hoping for. That's what I'm watching for. I'm not in this stock right now. To get into the stock, I want to see a close above this resistance line. We have a sloping resistance line. I want to see a close above that. Well, I said it would. Oh, you know what? I said I would get to Marvel. So let's do that. Okay, guys. I have 4 minutes to talk about this idea. The real deal traders, that are actually making their whole damn living trading will all testify to this. I'm talking the real deal ones. They have a small watch list, a small group of stocks or ETFs, index-based ETFs in a lot of cases. A lot of folks just use SPY, that they keep in their watch list and they trade only those. And then if something crazy happens and one of them drops off, like, for example, Ricky Gutierrez will trade GoPro. He just trades GoPro up and down all day, every single day. But then, there can be something like a big turnaround on GoPro. You can see a reversion of the trend, and we can enter a bearish regime in a ticker like GoPro. Say people just get tired of their damn helmet cameras. And then he's looking for other stocks. That's all there is to it. With the ETFs, it's a lot easier. The index-based ETFs is a lot easier because if they enter a bearish regime for like a short period, like a day or a longer time, you can do an inverse ETF. In this case, we're going to look at Marvel and talk about how you can trade it up and down all damn day and not worry about some other stocks, guys. And Tesla is one of those stocks. I think even Tesla might be one that has a high and tight flag, which is a rare pattern. It's like finding I don't know. It's like finding a unicorn or something. But very, very powerful. I hope to have a high and tight pattern on this show one day. All right, guys. So looking at Marvel, let's ignore what seems to be happening here. Let's ignore what seems to be happening with this trend. This is tech. This thing is subject to everything that's going on in tech over the past couple of days, which is folks are selling it. All right. So the prices are going down. Let's ignore what's happening here. Let's look at how you could be trading this thing up and down since, say, let's say July 2020. Awesome time to start getting into this, or maybe even later, August, because I see some really easy layups right here. Anyone looking at this chart right here, anyone that's looking at this one right here should recognize some very common bullish patterns. All right. And if you know them, just shout them out because they're in here. This is like an I Spy book. Remember those books that would just have someone just threw a bunch of garbage and action figures and you would have to look for stuff, or like a Where's Waldo. So let me know. And I'm going to start drawing something that I learned from Chris Capri. Exactly, Christian. Exactly. I'm going to start drawing something I learned from Chris Capri. In here, we have cycles. We have cycles of impulses up, and then corrective phases. Impulse up, corrective phase. Strong impulse up with that candle, corrective phase, impulse up, blah, 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 blah. Those are cycles within the broader cycle of Marvel, which is an upward trend, possibly turning sideways right now, right? All right. So something to remember that's really cool about technical analysis is that patterns are fractal. That means the same patterns you see on a small scope, like on a microscope, if you zoom out, you see the same patterns on a broader scale. It's pretty psychedelic. So I wonder if we can do this. If we change this to about a week, is the stock old enough? Not old enough. If we do this with an index, that's when you really see the beauty of it, where you can look at a 4 hour, an hour, a 30 minute. You can also look at the daily, the weekly, the monthly over longer periods of time, and you start to see the same stuff that it's doing in those micro windows. It's doing over longer periods of time. That's how it works. That's how it works. So okay, so I've drawn these arrows. They look a little effed right now. I'm not sure what's going on with that. Yes, I'm not getting into Elliott wave stuff until next week because I don't know enough about it. I'm too new. But right now we're just talking about the very simple what is happening with the price. Let's just look at it. Let's not try to church it up with any fancy Elliott wave stuff. All right, guys. Yeah, so let's take a psychedelic journey down this fractal chart here. So the great thing about this, when we really blow it up, pull it out a little bit, let's delete our drawings. We see all of these opportunities to enter the whole time that you have this stock. Let's go ahead and start drawing them. Pull, sloping resistance, sideways support. What do we got? Descending triangle. All right, so let's do our measured move within Marvel. Measure move, high to the low. Add that to our breakout right about here. That's just about where we got. That's just about as high as it got. Then what did it do? Sell off. All right, let's look at the next one. Oh, I'm looking at weekly. This is much easier on daily. Okay, here we go. Yeah, that makes a lot more sense. All right, let's do another one. We've got a strong upward trend. So I'm drawing the height of my pole here. We've got what looks like another, well, this is more of a pennant, isn't it? Right? Another pennant. So with pennants, we do our measured move for our conservative price target, and then we add that to our apex, which is right about here. And you can see that line up pretty well with the bottom body of this red candle. All right, now let's do our aggressive price target. We'll grab this line again. Well, actually, you know what? With the measured move, you're adding that to the breakout point, so it's right here. So I could take that back with our conservative move, which is the measured move, added to the breakout point, which is right here. We got right about to the peak of this candle almost perfectly. And then with our aggressive move, we're taking the height of the pole, and then we're adding that to the apex, All right, so almost got there, And you can do this all day. You can do this all day, guys. This is every week. You can use options. You can just enter with shares, however you want to do it. So if you've been in Marvel, let me get a 1 in the chat if you have been playing this. All right, deleting my drawings, guys, because I am 4 minutes over. We have a guest lesson for you today. I have someone who has a lot of experience, as I've already alluded to, in the Forex space, which means that he has been hardened. He's been hardened by the wild winds of the wilderness of not a lot of news to explain why the heck price is doing what it's doing. So he has relied on his tools. It's almost as if he's naked in the wilderness and all he has is a knife, and he's sharpening sticks to make spears to fend off the bears. And he's taking down those bears with technical analysis. So we've got Angelo on. Angelo, let's add you to the stream. How's it going, man?
It's going well. It's going well. So yeah, I'm here representing Forex League. Unfortunately, I'm not in my office right now because I did get COVID a couple of days ago. So
oh no,
I'm here in the home. Yeah, I'm here in the bedroom right now, fulfilling that prototypical bedroom, trader type situation. But yeah, I'm feeling fine. I'm feeling a little bit better. We've been trying to hop on for a few days now. Yeah, so I'm definitely feeling good, and I'm excited to be here, man.
That's hey, great to hear. I hope you continue to stay on the up and up. And I'm really thankful for you joining us, even though you've got COVID. Really appreciate it, brother.
Yeah, no problem. I mean, I'm a relatively healthy, young person, but it's no joke.
So I just want to say, I mean, I really love to self-grandize myself. And my call out about the wildernesses of Forex and the naked and afraid reference is really fitting with your facial hair setup, my friend. You do look like you are a man of the mountains.
I've gotten a lot of comments. You know, I like to say that part of the whole internet persona. You know, you got to differentiate yourself out here. So the beard is in full effect right now. You know, I've gotten some negatives and some positives, but at the end of the day, it's my thing. You know what I'm saying?
Yes.
So I'm a roll with it. But yeah, man, it's a crazy world out here, and the beard is fitting.
I am all for it. You forget those negatives. What I feel like right now is you and me were like the same, but our face is just flipped in terms of the hair situation. And yeah, exactly. So we're the polar opposite in a good way. So I'm great. I'm really happy to have you. So what I mentioned to folks is that in Forex, technical analysis is king. And I'm wondering if you concur with that. And I'm wondering if you can explain to folks how that applies to stocks, because everyone here is a stock market junkie. I'm sure we got a few Forex people, but they're all stock market gambling degenerates. All of them. They need help. So I'm hoping that you can explain how that applies.
Yeah, I mean, I obviously trade just the currency in the commodity markets right now. What I would say is all of the technical patterns that you were just going over, descending triangles, rectangle patterns, head and shoulders patterns. I mean, trend line, support and resistance, all of these things are going to apply the same way that you would on the Forex market. The only difference is with the Forex market, what I like to say to people who ask me, should I do stocks or Forex, is the market doesn't close. So there's not going to be many gaps, you know, depending on the charts that you're looking at. The markets are going to be more full in that sense. Obviously, in stocks, you know, you're going to be trading the New York Stock Exchange, you know, for you guys that are in the U.S. And there's going to be gaps. There's going to be like differentiators, which are going to, in a way, like complicate the patterns that you're using. And you just have to be mindful of that. You know, you're trading in the New York session, so your time frames need to be a little bit different. Maybe you're down on the lower time frames trying to catch those moves, you know, earlier in the mornings. But in regards to the technical, the patterns, kind of you using some sort of confluence strategy, using multiple confirmations and everything like that. It's the charts are the charts. I mean, you're gonna operate kind of the same way. You just might not be swing trading the same as on a Forex chart, you know, the same way that you would be on a stock chart, but it's all relatively similar, guys. You know, if you're trying to learn technicals, what I like to say is with the stocks is it's a little bit more fundamental, you know, fundamentally driven. So you're definitely going to want to look more into the companies that you're investing in. One report comes out, things are going to be a lot more volatile because at the end of the day, the Forex market, you're investing in whole countries, whole economies, you know, as opposed to the stock market, you're investing specifically in a much smaller entity. You know, even Amazon, it's, you know, it is bigger than some countries, but it's, you know, it's going to be a smaller scale. So you're going to want to be looking more into those reports, you know, on the fundamentals that are coming out. But at the end of the day, it's, you know, the technicals, the charts are the charts. You could apply them, stocks, Forex, commodities, now crypto. You know, you're starting to see a lot of people try to apply technicals on there. Any chart that's trending, guys, you could apply these tools to.
All right. Well, I would love it if you're able to, Angelo, share your screen, if you could.
Yeah, I could go ahead.
Yeah, and give us a lesson. I mean, I would love a Forex lesson. This could be a great introduction to Forex. I would love if you could apply this to cryptocurrency, to stocks, whatever you're feeling good about sharing.
Yeah, can you see my screen?
Yep.
Yeah, so I was just we do live sessions on Wednesdays at 9 a.m. completely for free for our community. And I was actually just doing a little breakdown on USD CAD. So I'm going to run through kind of what we do at Forex League. And we're always going to start, guys, on a higher time frame. So looking at USD CAD here, I do use a bit of quarters theory. So I've got these monthly and these weekly levels here about 10,000 points apart or 1,000 pips apart. So in Forex, for you guys that don't know, the count for the actual numbers is it's a pip count. So I'm just gonna bring this on really quickly right here. So as you can see, this number 205, so that would be 205 pips, or it's 2,051 points. So really quickly, that's just how you're going to actually count the movements in Forex. So looking at this chart right here, we always are going to start on a higher time frame. And this is kind of what I'm talking about in regard to, and you can apply this to stocks as well, but it's, you know, always looking at the higher time frame, overall direction as to what's going on. Going into this week, guys, just looking at this chart, we were very bearish on this pair. The moving averages I use are the 8 and 18, and then the 200-day moving average as well. So we're below all of these, all of these indicators. So the trend is clearly bearish. Going into the week, I like to just do a quick look on the weekly. We had this bearish candle close last week telling me, okay, sellers are in control of the market right now. We pushed lower, and then I have my little monthly level mark down here, and I'm just gonna hop up. And again, we just went over all this in the live session that we did for the community. But if we come on this monthly time frame, you could see I have this support level marked based on right here. We have resistance, we have support here. This level was tested again here, this wick. So this is clearly a major level that we're coming into that I'm gonna look for potential reversals or whatnot. But just going into the week, I was expecting the push down into this level. Now coming down to the daily time frame, just talking about overall market structure really quickly. The way that I trade is really trying to be as clean as possible. Just look at market structure, and then also use Fibonacci. So I use a combination of the Fibonacci tool and then just pure price action. And looking at this daily time frame, we can see the trend clearly very bearish here. Made this low, pulled back to this lower high, pushed down to this low, made this lower high right here. But I want to mainly focus on this area right here. We already know we're bearish on the daily, the weekly. Now we want to sort of try to get in. We want to try to get in on a trade. We want to get in on a trade idea. So this is a little lesson that I kind of just give to the beginner members, people that don't know much about market structure, don't know much about looking at charts. There's a lot going on right now. There's a lot going on in the chart. So what I'll do is I'll use this path tool, and I'll just start to trace over this all of these moves that are obviously happen with the candlesticks and everything. I'll trace over all of this, and then I'll actually hide the candles. Again, this is just very good for beginners. I'll take off the indicators right here, and I'll go over. Yeah, and then I'll go over really quickly with the fib. This is how I actually denote market structure. So I'll bring the fibs from this low to this high, and whenever we hit 38.2 or any of these levels below here, I'm not going to go over in depth Fibonacci, but the main levels are the 38.2 and the 618. Those are my main levels I'm looking for reversals at. So until we come down, if price comes to here, this isn't a higher low. This isn't structure. Price comes here, it's not a higher low. And we have to validate this. This is just a very beginner type lesson, but obviously if we bring on the candles, there's wicks, there's other things. But as soon as price comes here, and price was like at this point, then I start to denote this. Okay, this is a higher low. I don't move my fib until we break this 0%. As you can see here, broke the 0%, and then we refibbed to this high. We came down, hit 61.8, came up. This is now my higher low. Push down again, retest this level. This is, obviously double bottom, two points of support here now. So once this level breaks, because we push up again, this is my higher low, breaks right here, all of a sudden it's a break of structure. So I'm going to start to flip my fibs. We're going to fib from this level. Now this new trends, this thing pulls back 50%. So now we're in a downtrend. Again, we don't move, or you don't do anything with the fibs till we break zero. Break zero right there. So I'm going to refib again. And guys, where we're trying to enter in an uptrend is in the higher lows, in a downtrend is in the lower highs. Just keeping it as simple as possible. So here we had this pullback to 618. Then we pushed down again, broke 0%. So as you can see now, this is where I'm currently at in price. I'm going to go ahead and bring back on everything right here. So currently, I'm going to take this off. We just made this new low. I'm seeing whether we find support here. I have my monthly level. So obviously, this is my support level. I'm expecting buyers or some sort of volume to come in off of this level. And then this is when I start to, if I wanted to get in on maybe an intraday move and I was just covering this, you can apply this method of structure on really every single time frame. So on my call, I went over on this 30-minute now, that same type of exercise. And then this is what we're focused on. We had, this is our previous lower high on the 30-minute. And then as you can see, we were coming in and retesting this level. So as we're getting rejection here, I'm either looking to short this back into, these lows right here or even beyond. Or if this breaks right here, we get a break of resistance all the way down on this 30-minute time frame. I'm going to look for that first high or low before longing this. And then I'm going to bump back up to my 4-hour. And remember, 4-hour overall, we're very bearish on this. The trend is bearish, so I'm going to start to target first this 38.2 level, then this 61.8 level. And this became more of an advanced kind of lesson because now I'm starting to get into like the multi-time frame analysis and like understanding where you're at, because guys, you could always, you have to remain flexible. Don't marry a short bias. Don't marry a long bias. There's always going to be an opportunity to trade. You gotta always know exactly where you're at. So that was just kind of going through market structure, using the fibs, a potential idea that I had for today. Either again, looking for the sells off of this level or looking for that break and then ride into a little bit of a higher level of resistance here and then look for sells again. So again, just being agile is kind of just the name of the game, and Forex is going to move really quickly. It's the most volatile market here that you guys can possibly trade. So you gotta be dynamic, man. You gotta be.
So, okay. So I want to stop you there and summarize some things. I want to go back on some really cool stuff I saw. The first thing was that you just used a line tool to draw the basic structure of the price action. And then you hid the candles.
Right.
Which is, I love that. I've never tried that. But when you're looking at like books on technical analysis or like infographics and stuff like that, 50 to 60% of the time, they're just showing you lines to show the basic structure, which is an abstraction of the actual price action. And it's super, super helpful to get the noise out of the way. So that's very awesome that you were doing that. And then the next thing that you did that was really cool was that you used those levels to enter your Fibonacci levels for your Fibonacci retracement tool. Very, very, very cool.
Yeah, it's I try to keep, I have so many people message me that are clearly struggling with trading and understanding market structure, and they're trying to ask for like, what's the best tool or indicator to use. I mean, the only reason I use the moving averages because in my opinion, like it just to me makes sense. Like we have price over the last 200 days has obviously maintained below this level. This is a significant indicator to then look at. It's a level of resistance. I like to say the 200-day is the last line of resistance, and then these 8 and 18 moving averages are just your intraday moves, intraday little resistance. So there's a lot more to get into, and we can get into on future sessions here. But market structure is king, guys, and just use market structure plus price action, and you'll be able to find some high probability trades.
I mean, you've given us some fantastic nuggets, and there's one more. So one is simplify the price pattern or the price action or market structure by drawing it with this line and then removing the candles, just hiding them. I'm going to use that going forward. I love that. The next thing is using that for your Fibonacci extensions, and your key levels you said were the 30 and the 60, right?
Yeah, the key levels that I have are 38.2 and 61.8.
And you said that those levels are reversal levels, right?
Yeah, those are the main levels I'm looking at for reversal.
So another way to put that is a bounce, right?
Yeah, I'm looking for price to really come into those levels. Sharp 38.2 is normally sharp rejection, going to push to that next level. And then what I like to tell everyone is that when we start to get up into these 618, 78.6, 88.6, price isn't going to just go from 0 to 100, like 78.6 to negative 27. Like it's going to, because at that point, the lower time frame trend has already trended fairly bullish if we're basing our structure on the 4 hour. So price will retrace to these higher levels, and you could even see it kind of right here. It'll retrace to these higher levels, and then it will start to transition on the lower time frame. So here we come to the 618, we push down a bit, come up, push down. So it's like we get all these opportunities now to start to enter, and that's where I drew this little combination here, guys. Is this is just the basis of any like trend and any sort of transition here. We've got the uptrend to the downtrend to the uptrend. So once we're looking at using the fibs and we have our market structure and we're saying like, okay, this is a potential lower high area, then you're going to try to look for, okay, what is another confirmation? And I always like to use price actions. We've got this bearish engulfing that went down there. Even at this point, we have this like 2 candle combination and this large wick. Not the best bearish variation, but then once what I'll do is I'll start to go down to a lower time frame, and I'm literally just looking for those those examples that I put at the top of the screen there. So this is clearly an uptrend. You know, this was our most previous higher low right here, and then this started to break, and then this is really the first opportunity to start to enter on this pair right here, this pullback, retest the high. Yeah, this surge is higher, but we have this doji, and then this candle covers it. So this respects this, so we could even start to then draw like a level of resistance here. And then these would have been the two kind of best areas to enter at these highs. And then if you wanted to wait even longer, you start to wait for like the moving averages all to start crossing and everything like that. And yeah, so that's kind of just a breakdown. I mean, we went through getting down what the structure was, and then all the way down to, you know, where am I going to potentially enter. Here we had the 618, we had these candlestick combinations there. I like to look at least like 2 confirmations before going down time frames and then looking for entries.
And then one last thing that I was interested in is you mentioned resetting your Fibonacci retracement tool.
Yeah.
Is that when you cross 0? Is that what you said?
Yeah. So whenever price cross, so here we have it obviously fib from our high to our low, and then price is breaking 0% now. So price breaks 0%. So at this point, we're forming a new low. So we're forming a new low here. You know, our previous lower high again was at whenever level was tested. This was 61.8 was tested right here. So what I would do, and we could even leave this on until we find a level of support. Like, see how this thing is still falling right now? So I'm using my negative 27 as a target, my negative 618 as a target. Once these levels are hit and then find some sort of support like this starts to show, you know, reversal, starts to shoot up a bit, that's when I'm going to refib from my previous lower high, which is right here. And, you know, why is this my previous lower high? I'm just saying that because if this level were to break, I'm just going to clean this up a little bit and take some of this stuff off. If this level right here were to break, and I'll draw like a little supply zone up here, then the trend is reversing. The trend is no longer bearish. So as long as this level is respected on this 4 hour, this thing could shoot right now all the way up to this level, and I would still be looking for a reversal, still be looking for a sell based on the confirmations that I have here and the trends that we're in. So yeah, just, you know, move the fibs once it breaks 0.
Great lesson. Angela, I want to thank you very, very much for joining us today on Get Technical. I think that this is a great foundation, and I would love to have you on again to continue on this foundation and build upon the lessons learned today, if you'd be into that.
Yeah, that'd be great. I mean, we do live sessions on Sundays and Wednesdays. Sundays, we do them at 8 p.m. Wednesdays, we do them at 9 a.m. And, I'm always available to hop on and go through. Again, these are very basic concepts of technical analysis, and we can even narrow down into, different topics. And I'd be excited to do that.
Hell yeah. All right, guys. That is Angelo with Forex League. Is there a URL we can send folks to, or is it just going to social first to learn more from
you guys can go to forexleagueco.com. That's what our website is. But it is mainly just Instagram. So on Instagram, we're Forex League, and then at Nickdarkfx. And then the link in the bio is our Telegram, and that's where everything is at. So we have a website, all the details are on there, but this is the 21st century, man. Telegram is where it's at. Telegram's where all the sign up bots and all the information is. So, find us on Instagram and get in the Telegram.
All right, there you go. Angelo, thank you very much for being on the show today.
No problem.
Have a great morning. See you, Angelo. Aggressive cutoff from Coach Spencer, guys. Aggressive cutoff.
Oh, there was a delay. That was probably my fault. Miscommunication. Sorry, Angelo.
Sorry about that, Angelo. Hey, but that's why we like Spencer. You got to have a hard ass. I'm just a weak little soy boy, so it's good. We got to have hard ass Spencer here to balance me out. All right, guys, we've got 3 minutes. I just want to let everyone know there will not be a Get Technical tomorrow or the day after. We are breaking up our regularly scheduled broadcasting for the Benzinga Cannabis Capital Conference. So it's just Thursday and Friday. We're not having our normal live streams. We'll be back on Monday with all the silly goose fun times, education, and trade ideas. Guys, I want to thank you. One thing I want to do really quick while you're here, don't leave yet, because I'm going to give you an opportunity to get some free shit, is have you fill out a brief roast a Neil in the name of improving the show survey. About 35 of you have done it already. So what I want you to do is click the link that's in the chat right now. I'm sending it right now, and fill out the survey if you haven't already. And then what we're going to do on Monday, guys, is I'm going to put all your names onto a spinning wheel, and it's going to be a stupid little thing. And we're going to spin the wheel around, and we're going to pick 3 people that win randomly on the spinning wheel to give out Get Technical swag to. All right. So make sure you guys stop by swag.benzinga.com to check out the Get Technical swag. We got some shirts, we got some hats, we got some mugs. Let me know if I should make anything else. We do have some Benzinga Pro boxer shorts, boxer briefs. I am not against Get Technical boxers. So I would be willing to introduce those if you like them. NEAL Turbojet is how you spell my name. Thank you again, as always. I also think you should choose a 4th winner, your favorite one. All right, 13 has convinced me I will do a 4th winner. Also, next week, I'm going to have a soundboard because 13 told me I should have a soundboard. And I'm going to do a little bit different than Luke Jacoby.
Wait, Neil,
what?
I can get you. Tell me what sound you want. I will get them for you.
Let's talk about it after the show.
Okay.
I know exactly what I want, so let's talk about that. So what?
I mean, I can play some samples for you right now, but you probably want your own soundboard. So whoa, look at that. Okay.
All right, so
no, yes, no.
That one would have been great for yesterday, if you know what I'm talking about. So I know I don't fucking like that because everyone else has it. All right?
Okay,
we like to be different.
We're gonna be
like to be different and kooky here. All right, we're zany. So guys, there's that. Also, as always, follow me at Neil's tweets, where you'll see the watch list. I'm going to pin it today, the watch list today, and then I'm going to comment on those tweets with the charts that we have. I also screen capped a little part of Angelo's lesson. I hope he doesn't get mad at me, but I screen cap part of it because I liked it, and I'm going to add that to the thread too. So lessons to be found there. And as always, if you want to go back and watch these lessons and learn from them, just wait like an hour or two, something like that, and we post the episode in segments on our YouTube at Benzinga's YouTube, youtube.com/Benzinga. Spencer, what are you here for? You don't like
I'm about to tell people that the stream is ending, so you want to keep watching. Go over to the next stream. It's in the description. It's in chat. It's pinned. It's on our YouTube channel. It's right there. It's right below where you're watching. Trading with Benzinga Pro. Demo with Ryan and Jonathan, and then a Newsdesk update with Randy Elias. And that's what I was going to say. So, nice shirt, Neil.
Thanks.
So we're about to hop off. There's not going to be any content coming from this video anymore. It's over forever.
I wish I could do it. I need more time. I want to thank the person in the survey that said that the show should be half an hour longer.
Longer. I thought they said a half hour. like a half.
Yeah, you would find joy in that. All right. Thanks, everyone. This is Spencer and Neil with Get Technical. Happy trading.
What are you guys still doing here? Go to the next stream. Click on the link in the description in chat.
It's in the description, guys. There's still
Yeah.
a lot of you here.
I'm leaving. I'm done.
Gotta
I'm
go.
leaving.